people are glad to take, 24-year-old aircraft, put them through a check and run them for a while.
This is the Time on Wing podcast, Season 3, 2025 edition.
Woohoo!
I'm Courtney Miller with Visual Approach Analytics. With me, as always, Garrick Deschavan of the Collateral Verifications. Garrick, who are we opening Season 3 with?
We have the pleasure of having David Chaimovitz, which we'll have to apologize in advance for mispronouncing his last name if that's not correct. So David is the current CEO of Setna IO. Before that, he was Director of Sales for CMT Manufacturing LLC. He is also sales and purchasing for Prime Air, which was a HAECO company. Founder of CW Energy Solutions, and he has a BS in business from the Indiana University of Bloomington. He is younger than us and more successful, as most of our guests are. So, it's going to be awesome. Again, what are we doing with our lives? I'm not quite sure. But either way,
successful people.
Exactly. Either way, David, this is your time on Wing.
Just a quick intermission before we continue with the show. We do get a lot of questions about how our listeners can support the show, and frankly, the easiest way is to continue the spirit of the show, which is just to reach out to us at conferences. But we also run businesses as well, and you can support us by supporting a lot of the work that we do. You can support the work that I do through Visual Approach by visiting visualapproach.io, where we produce a lot of research and analysis, a lot of data visualizations.
From my side, obviously, I focus more on metals, so anything that's aircraft related. If you're looking for valuations, whether it's on aircraft engines, I'm happy to help with any of those types of projects. So we appreciate certainly the opportunities to work with all of you. And we certainly also appreciate just the fact that people are willing to listen to what we have to say and enjoy kind of our thoughts and takes on what we think is a fascinating industry. So thank you.
Okay, back to the show.
So as I said before, we'd love to, how did you get the passion in aviation? I mean, it seems like you're definitely all in. So where to start?
Great question. But before I answer that, I just wanted to say I'm a massive fan of both of you guys and your podcasts.
But which one? If you had to pick one, if you were forced to,
don't do it.
Who do I like more? I like Courtney more because he responds to my emails faster.
Oh, nice.
Did you hear that, Gary?
Yeah, that's right.
Man, season 25 is going to be a banger of a year.
I'm a huge fan of you guys. I love Courtney's, letter that he puts out, every couple of days. It's probably one of the most informative pieces of information that I see.
Wow, cool.
And the podcast that you guys put together, it's you guys get probably the smartest people in the aviation industry, wide ranging as well. And you have really meaningful, interesting conversations. And I've learned a lot from you guys. And I've probably listened to almost every single one. So I'm definitely a huge fan and happy to be here with you guys today.
That's awesome.
That's better than Garrick and I. I don't.
Well, you don't listen to any of them. So I listen to part of them. We go through. Yeah.
They're really great, though. And, new hires who come to Setna, I always recommend that they start listening to the podcast because it gives people a holistic view of what the industry is. If you come at Setna and you're working in operations or parts trading or whatever function of the business, repair management, or you're working in the shop, you're kind of siloed in terms of the information that you are, seeing on a daily basis. And understanding the industry in a broader spectrum, I think, is super important. And you guys have a super digestible,
I'm going to put that on the website.
Information that comes out every couple of weeks that really can help people
on
our voyage to learning what the business really is. So thank you guys for what you do.
Yeah, well, thank you. That's great. Great to hear.
Passion for aviation and how did I get started? So I wouldn't say that I'm really a passionate aviator. I don't fly an airplane. Airplanes are cool. Obviously, I like them, but I didn't grow up with tons of airplane pictures on my wall. I wasn't obsessed with airplanes as a kid. I'm definitely a very passionate business person, and I'm very passionate about leadership and team building. And so that's, and I love deals. So I'm really a deal junkie more than anything.
Yeah.
So I got here. It's an interesting path. I was in college. I was at Indiana University. senior year, and I learned about the electricity and natural gas deregulation market in Illinois, which was happening at that time. So you could buy your utilities from a third party. I went to the Illinois Commerce Commission from my college house, which was an interesting place to say the least. Applied to the Illinois Commerce Commission, and I got a license where I was able to broker electricity. I went out and got a bunch of suppliers. I found an energy efficient light supplier, and I kind of melded those two together and marketed under my own concept. It was reasonably successful. I would literally go and knock on doors of businesses, handing out business cards, basically begging people to buy electricity and light bulbs from me.
That's the hustle.
It did relatively well for, being 22, 23, 24, but I like taking risk. I like making a bet and believing in something that, and putting my money where my mouth is and believing in something versus just kind of being a salesperson. And that's kind of what I was. So although I was doing relatively well for a young person, I knew it wasn't what I wanted to do with my life. I basically knocked on a door of a parts broker owned by the Heiko group, and sold him some electricity, sold him some light bulbs. The CEO said, "You seem like you might be interested in what we do here. You seem like you might be good at this. Why don't you take a look at it?" And he was showing me his spreadsheets, and he's, buying a part for $6,000 and selling it for $11,000, and buying something for $40,000 and selling it for $70,000. And I'm like, okay, I'm trying to make 0.3 cents per kilowatt hour, begging people to sign up an electricity contract. This seems to be better. I think I should look into it and give it a shot. So he offered me a job. I started January 2nd, 2013 as a sales assistant, and I pretty much fell in love with the business by my second week. I was, learning the market on what the parts were, calling everybody that might have it, calling the repair shops, asking what the average repairs were, what drives a repair, what makes something valuable or not valuable, and then trying to find deals where we found net present value and then brokering those parts into airlines. A lot of it was reactionary, and a little bit of it was proactive, where we would buy inventory and stock it on the shelf. So I worked there for about 2 years, and I understood, within my first couple months that there was totally a lack of supply chain, where you really had in stock, ready to go material that somebody really understands the price of the market price of every part on the aircraft, who can repair it economically, but with a high degree of quality, and had it, ready to go, where, it's like Amazon. If you go on Amazon, you're probably not going to buy the delivery that's going to be in 45 days. So I thought that there was a real opportunity to build a business, understand every single part number on every single commercial aircraft, part number by part number, line item by line item. What's it worth? Who repairs it? What does it cost to repair it? Where can you buy it? And build a scalable business doing this. And so I started Setna in 2016. We were called AeroTrade at the time, with myself and a family here in Chicago. I kind of knew how to parts trade. They knew how to get financing. They've run industrial businesses in the Chicagoland, well, really nationally, for the last 70 years or so, but still very much like a small family business. I mean, a large family business, but very much a family business, definitely not institutional. And so I started with them, and another guy named Robert James, who was out of Arizona. He worked from home for a couple of years. And today he's the president of Setnix, which is a world-class component MRO that we started in 2020. And that's kind of how we got the business going. By 2019, we had an office in the United Kingdom run by a gentleman named Tom Bulcott. He's the president of our parts trading business today. We had about 30 employees. We had a very significant amount of inventory, although we hadn't purchased any full aircraft or engines yet, because we didn't really have enough data where we were comfortable to, spend what those assets were trading for at that time. But we still went into, the end of 2019 with $15 million of inventory costs and $20 million of AR. So it wasn't like a nothing company. It was definitely a real company. I think we did $40 million of sales that year. January 2nd, 2020, It was the first time I heard about a mysterious virus in Wuhan, China. Started
Nothing
really paying.
Nothing really came of that, though.
Something came of that. And prior to 2020, we had gone just straight growth mode. So 2016, 2 million of sales. 2017, 12 million, 2018, 25 million, 2019, 40 million. So we were really, growing at a pretty exponential rate. And I hear about, this mysterious virus in January, and I'm following it like every day. And I'm like, I heard about, I wasn't in the industry, but I heard about SARS, and, you've heard about these crises that have happened in aviation historically forever, and they're going to happen again. And so I kind of had the inkling that this was going to be something pretty serious. My father-in-law, he's actually an epidemiologist, a PhD doctor. He's a virus guy. He knows about this stuff. And I'm calling him like every day, asking him what his opinion was on the situation. And, I understood pretty quickly that this was a dire situation and it was going to be a major problem. I believe it was January 17th, 2020. And I remember all this because it's like truly such an inflection point in what we do at Setna and where we are today versus where we were versus where we would have been had none of this transpired. So it's January 17th. It's a Sunday. I think that was the date. I called Tom in the UK and I said, don't buy anything. Something really strange is happening here. Sell our inventory. I'm going to get the AR insured, make sure that we're good on that front. Sell at prices lower than we normally would accept because I think there's going to be a big problem. Let's just kind of take it like day by day and see how this progresses. But right now, we need to be really cautious on what's going on because this might be like a real problem. So
just for context, the iStat that we always refer to in Austin right before COVID was like a month and a half after that. It was like the 1st of March. You're talking 45 days almost, 40 days before that.
Yeah, 100%. So I, for better or for worse, I'm definitely into the depths of the internet, and I always have been. So
that's how we found our podcast.
It is. Well, it is. But no, I've always been into the depths of the internet, and I've always been a news junkie. And I think understanding what's going on in the world, it might drive you a little crazy, on negative side. But on the positive side, if you're running a business, I think it's really important to understand what's going on and what the tenor is on everything going on in the world. And so I was very early to stop buying parts. I'm sure that we're the first people in the world to make this, decision internally. We obviously didn't publicize it or say anything. And we sold like 20, we were able to lower our inventory cost by like 25% between January 17th and, March 15th when the first lockdowns really started. So we had a nice head start. I was also informing our banking partners super early what we were doing. So, March 5th, Trump announced the travel ban to Europe. And I said, we're going into a complete nightmare. This is going to be a huge problem. We laid people off, which was unbelievably emotionally challenging for me at the time. I'd never, we'd fired poor performers, but we had never, laid people off, obviously. But, I talked to my partner, the family in Chicago, and I said, like, what do you think we should do here? And he goes, if you have, if there's a decision to be made, you need to be early. You don't want to be late. And so we made that really tough decision early. We were able to give everybody bonuses on their way out because we're still doing well at that point. The business, February, I think, was like a record month for us. We were doing great. But I knew there was going to be massive headwinds. And if you go into a problem and you're flat-footed and you're losing money, your banks are going to have a big problem with you. And all of a sudden, had we not made those early drastic cuts, we cut everyone's commission to zero. I cut my salary to zero. We cut all of our expenses like immediately and very drastically. Because we did that, by June of 2020, our sales were down 82% versus January that year. So we were like barely doing anything. We still had a positive net income without any free money from the government. And because we were able to maintain profitability through unbelievable challenges, our banks never gave us any problems at all. By April and May, really early April, I had made the determination that I personally thought that the COVID crisis and the actual medical situation was vastly overblown, and that it was going to pass sooner than people expected that it would. So if you remember in April of 2020, May of 2020, CNN is putting out articles telling people that there's never going to be a business conference ever again.
Oh, yeah.
This was what the common narrative was in the media, and people maybe don't remember that now. It's kind of been memory hold, but I do remember it. And, I didn't believe that. I remember in late February of that year, there was a French aircraft carrier. Like 4,000 people on this aircraft carrier got COVID, and none of them died. And so when the narrative is that like we have this super virus and we're all going to die from it, and then you see, you understand we understood what the denominator was. We didn't know what the numerator was. So when you figure out, you see all these people on an aircraft carrier where how many people there are, how many people get the virus, nobody's dying. Well, okay, maybe that's much more widespread than we thought. It's not as dangerous as we thought. And I think the world is going to return to normal faster than other people are telling us that it's going to return at that time.
Everybody was supposed to be on Zoom riding their Peloton bike. We'll never meet in person again. Like, the U.S. was down 97.5%. Like traffic was. There was
a day that we dipped under 100,000 passengers on the airline. I watched the TSA numbers. Me and Robert, and Tom, we were watching it every single day together. And we were watching it come back. And so we watched it go to, I think it was 97,000 was like the lowest day. It was under 100,000. And then we watched it start to recover. And so we did our first aircraft acquisition in July of 2020. I'm reasonably confident that we were the first people in the world to buy an aircraft or an engine post-lockdown at the new pricing. We bought a 777-200ER. Didn't have engines, it was missing an APU, it was definitely kind of like a carcass of an aircraft. We paid $250,000 for it. So, today that would obviously trade for significantly more than that. So that was really the inflection point of Setna going from this company that was solid, profitable, 30 people, and nice business to what it is today, which is maybe the largest independent part supplier in the world that has no institutional ownership. I don't know if we for sure are, but if we're not, we're definitely at the very top rung of that. Last year we did $430 million of revenue from $40 million in 2019. And I can tell you for sure, we would not be here if we didn't have the foresight to work through those challenges in early 2020 and play them the exact right way. So we shut down early and we got back into the game early. And because we did both those things, we timed them well, we are where we are today. Additionally, in 2020, I flew down to Arizona. Robert had been working from home for years, super technical parts, MRO guy. I said, all right, you need to go and start a shop, put some pants on, you're going back to work. So we went down to Arizona. We put a building under LOI in July 2020 also in Arizona. It's done really well, that building since, obviously. And we started building out our MRO. We closed in the building, I think in December of the year. And we started, buying tooling and picking up talent in the Phoenix area. Today, that business has about 60 people. And I think we did 3,500 8130s this year. So we're putting a good amount of volume through the shop. 3,500 work orders. And I think we did 8,000 8130s this year. So this tag is really out there. It's a huge value add to our business, and it's providing a lot of value to the whole world because there's totally a lack of demand for component repair. So that's been a great business for us. At the same time, we're in the office every day. We're working every day. We're buying aircraft. We're buying engines, and we're putting it out on LinkedIn. We're making press releases, and people are seeing what we're doing. And so all these other talented parts people, they're at their companies, they're hamstrung, their board of directors who are not necessarily really involved in running the company and don't really understand that the RFQs are picking up. There are things happening. They are just kind of paying attention to the mainstream narrative, and we're not buying anything. We're going to just sit down and do nothing. So these people are frustrated at their jobs, and they're approaching us saying, hey, we see you're active, you're doing things, we want to come join the team. So we picked up a tremendous amount of talented people to come join our trading team, all of which who are still with us together on the team. And we went from 30 people to 230 today. So, that was really, wow. It was an inflection point like no other. And, it changed how I see the world permanently, I think. At the time, it was mentally really challenging, but getting through it was definitely worth it in the end. I'll say that for sure. So that's my story. Today, Setna has headquartered here in Chicago, 230,000 square feet. Tempe, Arizona, we have like 150,000 square feet of ComponentMRO space, which we're still very much actively building out. London has a ComponentMRO, as well as a warehouse, which we're combining into one facility, 100,000 square feet, which we'll be moving into this summer, that we're purchasing as well. We have team members in 14 countries, I believe, mostly commercial people. We have an aircraft leasing business that we started this year. We own 6 on-lease aircraft and 6 on-lease engines. We own probably $500 million of components, so it's really a large, significant inventory. And it's a lot of fun to run, and I love what I do beyond belief. So I might not be passionate about aviation, but I love the industry. I love my company. I love the people that I get to work with every day. I love our vendors. I love our customers. And overall, it's the greatest industry in the world. And I could not be happier that I'm in it today, even though like aviation on its own is kind of okay to me.
Yeah, there's that whole making money thing.
That was a long
right?
answer, I guess.
Yeah, no, that's a good answer though. So, all right, hold on. Let me just make sure I understand the path here, because you went from graduating school, Indiana, but it could have been Purdue, but that's fine. Big
suspect place.
And you went to trading, and I remember a lot of this electricity trading and the brokers and all that, which has nothing to do with this type of work other than buy low, sell high, right? You end up at HEICO for 2 years on the sales side, and then you're like, you know what? I'm going to start a business. How do you figure these out? And then I have a follow-on question to that. When you're like, I want to start a ComponentMRO. How do you find people that can fix that? That's the missing link for me. Like, how did you figure this stuff out? Maybe we should stop recording so you could just tell us. So,
well, honestly, there's no secret and there's no shortcuts. I mean, I literally would, when I started at the HEICO company, I'm on the phones, I'm wearing a headset, I'm on the phone for 4 or 5 hours a day, calling everybody, asking one question after another, and banking all this information and understanding what the patterns are and meeting all these people and going to conferences. And really, it's just being on the phone and talking to people all day and asking the right questions. And then not being afraid to action those questions and finding that data and doing something with it. And so, yeah, it was really just one quote, one RFQ, one sales quote at a time, one customer meeting at a time, one vendor meeting at a time, one phone call at a time. And there's no secret. It's just grinding daily in and out. And I still do that today. Although the company's gotten, relatively large, I still totally do that. When I'm in the office, which is, 70% of the time, I'm still monitoring all the inventory. I'm monitoring all the sales. I'm helping the guys. Guys will come into my office and they'll be like, hey, this part, we priced it at $900. I think we should price it at $600. And I'll say, I think you're right. And that's cool that they come to talk to me about that stuff, because like I understand the business, and every single incremental dollar, it all adds up, in a major way over time. The narrative in the past couple of years is it's really hard to buy assets, and it's very hard, and there's not as many, teardown assets coming to market. And that's the major, holdup for a lot of these parts companies. I don't really agree with that, because if you go and you try to buy an airframe and you're only going to model the top 30 parts in the aircraft that everybody knows, you're not going to be able to buy the aircraft, because, there's a lot more value than that. You need to understand, okay, how do I tear down a thrust reverser? How do I tear down an APU? What do I want to do? Can I upgrade the inlet cowls? What do I do with the avionics? What can I mod can I mod from A to B? What does that cost? Does that make sense? Does that not make sense? How old are the cartridges on the fire extinguisher? What are the pin lengths on the brakes? How old are the slides? What's the data manufacturer on the rat? How many hours are in the THSA since it's, before it needs a back replacement? There's all these little data points that are unbelievably important. And if you know how to harness all of them, you can find plenty of value in the supply chain to buy these aircraft. But if you're only valuing the HPT blades and the fan blades and the LLPs on an engine, it's probably hard to buy them.
Yeah, I'm gonna call you out on something. Listen, nobody says they're not that into aviation and throws around acronyms like that. Like you're in, dude.
Oh, I mean, no, I'm in to the maximum, and I absolutely love what I'm doing beyond what you can imagine. So yeah, I guess I'm extremely passionate, of course.
No, but your differentiation, I think makes sense, right? And I wonder if this is almost so. It's almost a requirement of the parts business. Now, I say this with all due respect, but if you're going for the sexiest part of the business, it's not necessarily going to be the parts and the components, right? It's going to be the whole airplane and the engine and make much money. So if that's where the value is, like it almost kind of requires that agnostic kind of outside approach. I don't know. I don't have it. I just like the sexy stuff.
I like the masks and the fire extinguishers. I don't know what to tell you.
Yeah. Well, that's the, and I think that I feel like, from what you've talked about, it feels like you've got a pretty well-rounded business when it comes to you're able to buy assets on lease or off lease. You're able to take advantage of kind of breaking them down, selling the parts. You've got the ability to also maintain, overhaul the parts, right? Which it's something that, I think Courtney and I have started looking at, and we've talked about, to certain people in terms of like when you think about the industry and where it is today, especially on the leasing side. I feel like, there's only so many toggles that leasing companies can push to go, all right, you got your cost of funds, how else can you redifferentiate? And I think unless you're the big guy on the field and you've got a lot of buying power, you're just struggling, right? Because you're going, all right, we're competing for these sale-leasebacks and, making something, but it's not great because it's just highly competitive. So how do you differentiate yourself? And it feels like, as we kind of go into probably the next decade, maybe, right? That's I think that's going to be a way to differentiate, is having that ability, having that understanding so that you can get an airplane, on lease. And when you're done with it, you're not just kind of going, all right, we're going to sell this to somebody else and they take the risk, right? You have a whole understanding of, and I'm sure you probably do, based on how you talk, you probably also know, we're buying this airplane today. I know exactly what we're going to do with everything on that airplane until we basically sold, the last part, right? That's kind of probably your thinking. And it feels like the industry needs to go in that direction. And so is that from your side? I mean, are you seeing, similar in terms of like, hey, you really need to differentiate yourself in those different ways to be able to continue to be successful? Or, what are you thinking from that standpoint?
So I think I'm really lucky. Most other, maybe not most, but many of the other very large parts companies today and very, large integrated MRO companies, they started with large bankrolls and they were out buying engines and aircraft, and they were involved in, ABSs and, major financing of major assets. And that'll work, obviously. But I think that we're really lucky that we started at the very bottom and we understood the trading these little parts, because there's so many of them and the supply chains are so different and so complicated. Starting from the very bottom and building up from there, I think was unbelievably beneficial. And I kind of just got lucky that I fell into the parts brokerage and I didn't fall into, investment banking. That being said, I don't think I would have gotten a job as an investment banker because nobody would have hired me. So I guess it was probably my only, potential outcome. But I think we're really lucky that we did start from the very bottom. In terms of, I look at, the leasing business, and even if you're just buying, leases that are pretty much at market, I still think that they're a significantly better return than going to something like real estate, where, people are doing deals that are 6 caps. You can definitely find significantly better deals that are at market that are above that in aviation. So I think it's all relative. I think the returns, when you talk to these guys that were doing aircraft leasing in the 80s and like the 90s and, the pioneers of the industry, obviously the returns were different back then. And today the industry is much more mature. But I still think that there are, reasonably attractive deals in aviation, particularly in comparison to something like real estate, which is significantly, in my opinion, less complicated than aircraft leasing. When you take aircraft leasing and you combine it with fixing the parts yourself under an FAA certificate and selling those parts to, 1,200 different airlines around the world, that's an unbelievably complicated business that's not easy to replicate at all.
Yep. Complicated equals value, right?
Exactly. And the more complicated it is, the more margin you can earn in theory, because you're providing a lot of value to your customers. And we do provide a lot of value to our customers because, if we have something in stock ready to go, it's a power supply for, a battery. We sell it for $2,500, knew that thing might be 20 grand. We provide a lot of value to our customers. So if it costs us $300 to repair it at our own repair shop and it costs, $40 or $80 of labor, like we're making, 70% margins on our labor. And maybe that's from an asset that we've costed out and we're booking $2,000 a margin, which is high on a $2,500 sale. Yeah, but at the same time, we're the most competitively priced in the market and we're saving the airline 90%. So it's truly a win-win-win for everybody. And there's also a nice, green component to it where we're actually reusing material that otherwise would have been thrown out. And historically, a lot of the stuff has been thrown out. So it's good to reuse things when you can, when it makes economic sense.
I don't think I'm going to disagree with you on why you're successful, and I know you probably agree with this, but you give a lot of weight to COVID and buying at the lows. But I don't think that's necessarily it. I think it was just your ability to adapt and jump into that side as soon as you saw it. I mean, that sounds like somebody who would be like, yeah, screw electricity brokering. I'm going to jump into the aircraft parts business because you just happen to see that value. I don't want to blow too much smoke up your rear end, but it sounds a little bit more like that. MRO, like, I think we should do the component repair on that side. And I think that's really interesting, in particular to how the leasing business, if we just focus on that side, how that is evolving. I can't tell you how many times I've already heard, I'm sure we'll hear it next week in Dublin several times. Look, it's just an arbitrage play. You've got the cost of funds, which is interest rate driven. You've got the lease rate. And if we can't make the arbitrage in between there's no value. So it's just a commoditized play. And I mean, we've been saying this, you understand this far greater than we have. What about all the other things? Where is the value around that? Think about the industry different now. It is fundamentally different. COVID was a huge disruption. The recovery from COVID was its own sort of disruption.
I agree. There's definitely, there's a lot of interesting things to unpack there. So, we've been talking about the missing 3,500 aircraft that were supposed to be built that were never built. And, maybe Boeing and Airbus, they do get back to their, build expectations. And I don't know, what year is that going to happen? You guys will know better than I will.
What is it? 20 never? Yeah, we're talking the back end of this decade, right? I mean, we're already halfway. Damn. Happy 5-year anniversary for COVID, by the way.
Say they get back to their production this year, which is 100% not going to happen. We know that. There's already 3,500 missing aircraft. And so I liken this to 2008. So if you look at 2008, you see the housing market across the world collapse. You see the banks, all the federal banks drop their interest rates extraordinarily low. You see commercial banks not give money to anybody to do anything. So if you're a home builder, definitely not building anything. and maybe it's a 4-year period before construction on new housing starts again. Now you look at every country and you see, on the presidential campaign trail, you're having both parties in America and in Canada and in the United Kingdom. They have a housing crisis everywhere. We're short 5 million housing units. Well, you don't just become short 5 million housing units overnight. There is a systemic issue that took a long time to develop, where you didn't build houses for 4 or 5 years, and now you're short. And we're 17 years past that at this point, and we're still short housing. The same thing, in my opinion, is going to happen with aircraft, and you're going to have to extend the life, and the values of these assets are going to be worth more and more. And if you have return conditions with tier 1 carriers and tier 1 credits, you're going to be getting an asset, in my opinion, that's going to be worth a lot more than what the appraisers are telling you that it's going to be worth. And it's kind of a simple function. Okay, what are the LLPs going to increase on the engine per year? And are there still going to be shop visits going on when you get your asset back? Because if there's still shop visits going on and people are still buying new LLPs to put into engines, which on the fleet that exists today, I'm not talking like the Dash 3, like the classics. I'm not talking like the 5A, like the super old A320s, but 15-year-old NGs, or 6-year-old NGs. There's going to be shop visits on the CFM market people are going to be buying new LLPs for well over a decade. And if you get an asset back in 10 years and it's a CFM engine, and CFM is compounding their LLPs at, I don't know, 3 to 10% per year, to me, buying these assets, it's you have leverage compounding on LLPs is really what you're banking on. It's an oligopoly. It's a controlled supply chain. Nobody's going to come out and make a replacement LLP for a cheaper price that they're going to be able to stick in there. That's not going to happen. And so, to me, the returns are going to be, it's not like a 4% return type of deal, because I'm confident that there's going to be strong demand on the legacy engines and aircraft that exist. So yeah, I'm long-term bullish. And I think the same thing that's going to play out with housing is going to play out in aviation. And it's not a 4-year problem or a 5-year problem. I think it's a generational issue. And it's going to be the tail, the supply chain tail from COVID might last 20 years.
Yeah.
Maybe it won't. Maybe I'm totally wrong, but I think it's going to last a very long time.
It'll last until our attention is consumed by whatever happens next, right? If there's another crisis, and then we'll just attribute everything to that. I mean, look, everything you're talking about here is green time. We think of green time as like engine time, but really for any part. You talked about like the expiration on a fire extinguisher or the slide, right? It's just how much airplane flying in the air for people who paid money to sit on it time does this represent? And in the past, at production rates so high, at interest rates so low, which the two go hand in hand, the value of that time was less than it is now and will be going forward. That's really interesting. The other thing, too, is you mentioned like the Dash 3s. What's so interesting about new engine programs today compared to, so like when the Dash 7s, the CFM 56 Dash 7s and the later Dash 5s came out, right? It was an iteration. They were better engines, right? They had their early hiccups, nothing like we're seeing today, right? Especially on the reliability side. That is very different. Like the LEAPs, the GTFs in particular, just on the narrow body side, are new. They're getting the fuel burn. Like that's absolutely happening. But they're just burning. They're burning the components to produce thrust, right? So we've not seen that shift. That only increases kind of the residual value of those legacy parts before you even get to spare parts escalation from the OEMs and what they're going to do and how much they can wring out of a turnip. Is that blood from a turnip?
Blood from a turnip? Is that what it is?
No. Blood from a stone?
Blood from a stone. I think it's blood from a stone, yeah. Yeah. Give me a juice from a turnip? I don't know. It's, yeah.
So Courtney, you put out an article yesterday about the LEAPs. What are you seeing right now in terms of the mean time between removal on first run LEAP engines?
Half.
Cycles.
Like it's. I'll just use a big round number, but half. There. And Garrick, you definitely know as much as I do, probably more on this. But the feedback from the operators is, they're getting half the expectation, which may have been half of like NG CFM 56 time on wing, right? So the shop visits are just, and not only that, they're more expensive. Right, so there's a step change that we usually say that is a good thing, but they actually took a step down. They just traded fuel burn for maintenance costs.
Maintenance, yeah. And so if you're a crafty operator and you can buy a 737 NG that's 10 years old or 15 years old and it costs you $20 million, you're losing your fuel burn, but you're picking almost all of it, if not all of it, back up on maintenance, but you have a lot less depreciation and you have a lot less financing costs to buy these older aircraft. You could definitely make an argument that it might be more economical to operate an old aircraft. I'm definitely not an airline CEO. I don't understand the airline business, not like I understand the parts business, so I could be totally wrong about this, but I think that argument could be at least reasonably made. Whether right or wrong, I don't know, but it's at least an argument that can be talked about.
So from the airline perspective, there are different types of decisions that need to be made. If you need to grow, and you're a decent sized airline, you need to buy new kit, probably, right? Just for the amount of supply that's out there, the availability. So that's one. I mean, you're going to see it. They're still producing aircraft. But the other decision is, okay, do I buy used kit? And this is where the prices have gone up because more airlines are making that decision. Do I want to get midlife aircraft? But then there's this third decision that I'm finding really interesting right now, which is, wait a minute, why am I kicking my old airplanes out? Send those back into the shop. So you're getting another shop visit out of airplanes are just lasting longer. And we're on the front end. Like we actually don't know how much longer airplanes are going to last because we're only about 3 years into it from the time when this really started after COVID. And if a shop visit gets an airplane 5 or 6 years, we could see a wave of kind of just really slow retirements for another couple years.
Yeah. Well, so as you guys were chatting, I was thinking about this, and the one thing that I haven't really thought about yet until now is, you're as a lessor, right? You're enjoying higher lease rates than you would have anticipated for second, third leases, right? I mean, the market is definitely very strong for that, and so I think why this continues to get extended as well is at some point lessors can lower the lease rate to keep that going. Where if all of a sudden you're looking at, okay, so you're buying a new A320 Neo, right, and it's $400,000 a month. There's nothing to stop from the lessors that have been able to depreciate their assets longer than they anticipated to go, you know what, we were getting 200. I can get, I'll do it for 100 if you keep it for another 5 years. Uh-huh. And it's still good for us because we've depreciated enough and it'll continue to depreciate. Uh-huh. And that, we saw that with, you talked about the classics, right? The same thing happened with classic freighters, right? They were, when they first came out, right? Classic in the I guess before the financial crisis into kind of the early teens of the last decade, right? They were very similar to NGs where they were kind of the 165, 175, right? Then they rationalized, went back down to, it was like 140, 130, 140, something like that. And it made sense. And then when the, NGs were starting to get converted through COVID because people had no, they were like, well, there's demand for freighters, so let's put all our money in that. All of a sudden, the classic freighter lessors went, well, you know what? At that point, we've enjoyed quite a good amount. So if we need to lower our rates to like 90 grand a month or 80 grand a month, I've depreciated my assets to nothing. I could still do it. And the operators that are flying those airplanes, they're going, well, I don't really care what it's all about cost for me. I just want stuff on an airplane. So I think there is, some of that we haven't really considered either in terms of, as more, Maxes and Neos get delivered as they ramp up production. There is still one toggle from, I think, the leasing company to be able to say, well, you know what, we've We've been able to do that, and so why not? If we still have life, you still have green time in the airplanes. Yeah, let's play that card where we can say, well, what if we lower it? Will you keep it another few years? And that just keeps that machine going of needing parts, needing maintenance, all that stuff. So it's an interesting kind of thought that I hadn't really kind of put too much time into, but it's something that we could see definitely, I think, happen, which again just extends everything out.
Yeah, we're taking an aircraft that we own right now that is going to be 24 years old. We're putting it through a 6-year check, and we're signing a 4-year lease with a 2-year extension on it. And it's kind of, there's like some engine stuff where it may not make it, and there's optionality there. But I mean, people are glad to take 24-year-old aircraft, put them through a check, and run them for a while.
And let's consider the end of that, because the combination of Setna as a parts broker trader, I don't make sure I qualify it.
I would say trader more than we own some inventory. I think we're more of a trader.
Yeah, sure. No, you're right. That's fair. And okay, so the end of that lease. So the combination of the lease and the trader, the parts aspect, really changes the end of life residual value for that aircraft. For instance, now just using big fat round numbers, if on the individual part you have 100% margin, I don't know if that's true or not, but if it's 100%, that means that your residual value is twice what it would be for any other lessor, because they have to sell it at half price for what you would have bought it for to part it out.
It could be. I mean, it depends on what the aircraft is. Again, if you're taking a 30-year-old, actually, no, it doesn't. Regardless, yes, that's the numbers are all essentially that's accurate. We're able to find a lot more value. We're also able to put them through our own MROs, which we have our 3 that we have right now. We have a couple others that are under LOI to purchase. So by the end of Q1, we should have 5 component MROs. So we also have this MRO feeder, and then you're feeding your own MROs with your parts, and you're creating a tremendous amount of enterprise value. So you're like winning at like every turn across the board. Your enterprise value is increasing. Your operating income is increasing. You're filling your shops with work. You're providing people with meaningful employment. There's a lot of ways to win when you own these assets much earlier in their life cycle. And I would bet, I mean, listen, it's hard to say how many aircraft we're going to be buying per year. We're never going to sell an aircraft. We're only going to, part them out. But I wouldn't be surprised if, last year we started and we bought 6 aircraft in our first year. I would not be surprised if we bought 6 to 12, 13, 14 aircraft a year, depending on, what they are, and hold them for a long time. So, if you buy, especially if you're buying, real true midlife kit, you could end up having a portfolio of 50 to 100 aircraft that we own, which I wouldn't be surprised if that's what this does look like in 5 or 6 years. I think that's what we're going to work towards. You can't predict the future. We're not going to do deals that don't make sense, obviously. And we're totally limited by the amount of capital that we have. We don't raise capital, and we won't raise capital. So, we're limited by that. But I think it's plausible, based on what we're doing today, that we're a real player in the midlife space.
It's so wonderfully boring. And I only say that half-heartedly because it is really exciting. But in the context of okay, let's go raise. We'll take our margin on that. We'll lever it up, right? And then we'll go and buy a bunch of airplanes, put them on lease, trade them out, right? There's this really sexy, quick moving, but and valuable. I don't mean to suggest that that's not valuable, but this is intrinsically valuable, to the parts, to the part number. That's so interesting.
Yeah, it's different, and I don't think anybody has really gone about it this way in the past with any type of real scale. Maybe some engine, lessors are obviously doing this on engines that are very specific and very successful. Of course, somebody like FTAI comes to mind, amazing business right there. But this is on a broader spectrum, and it's smaller, but it's private, so it's different, but something similar to kind of what those guys are doing. Amazing business they have over there.
Mm-hmm.
Yeah, absolutely. Yeah, and it's and like you say, it's definitely it's a different way of thinking, which I think I think for the industry to evolve, I think it needs to go in that direction. And it may not be like, okay, well, yeah, every lessor needs to have their own MROs and their own, part out shops and stuff like that. But I think it needs to be, for, because if everybody's competing based on, pricing the cash flows, it only takes you so far, right? It just becomes, well, how much risk are you willing to take on the back end? But if, as people, and it's, there's plenty of smart people in the industry, so they understand, right? So I think that needs to probably happen for I think lessors to continue doing business, to kind of go, look, we need to better understand what's going to happen on the back end, so that it's not just, well, when we're done, we'll just say, yeah, we'll just sell it for part out, right? It's more like it has to be more. It's a more complicated answer than that.
But running these businesses is unbelievably challenging, and there's a lot of parts companies, and the amount of parts companies that are well run, in my opinion, it's a much harder business to run than an aircraft lessor. An aircraft lessor is a relatively complicated business to run, but at the end of the day, you're deploying capital, you're buying an asset, you're collecting maintenance reserves, you're gauging credit risk, you're trying to make a reasonable buy, you're trying to collect your payments from the airlines. But like the variables that you have to deal with to set up an MRO, to buy or build tooling and hire technicians and manage technicians, and to, sell parts to all the airlines around the world and give them net credit terms and collect your money from everywhere. There's more variables, it's more involved, and it's a hard business to run. So, starting with a large pile of money and getting into the parts business, I'm not sure that that's a recipe for success. And maybe it should be avoided, to be honest, because, if you're given money and you have to deploy it, good luck finding value.
That's always dangerous. We've seen that over and over again, where people are like, well, I'll pay a premium for this because I know that at the end of the day, I'm going to get out of it before I do anything else with it. And so we'll just, hopefully that'll happen, right? Especially when you're in an environment where things have been kind of going up year over year for the last few years, it's very easy to sell that. And it's the same thing, I think, on the parts side, to be able to justify, look, we bought these engines, we bought this landing gear, and we traded it for, within 30 days or 60 days for twice as much, right? As an investor, you're like, great, keep doing that, right? But that's not the reality of the business, right? You need to have a full understanding of like, well, yeah, this happened here, but it may not happen every time, and it may take us 2 years, right?
Every time, for every one of those deals, whoever's doing those deals, they have like a 4-year-old part on their balance sheet that they never sold. If they're operating their business as well, it's written down to zero. Mm-hmm. If you're not, it's still on your balance sheet with cost. And you have this inventory that could have a tremendous amount of negative equity in it, and you are actually underwater, even though it may look like you're doing well. So you really, really need to pay attention to your inventory. And yeah, like parts traders, you hear these deals that are crazy that people make a ton of money on, great. But how many deals went wrong and you're still holding costs in your inventory, and it's actually a boat anchor and you're never going to sell it? And if you collect enough of those over time, you have a real problem in your business. And if you look at who the top 10 parts companies were in the world in 2019 versus today, there's a different group of people there. Many of those people are different. Many of them are the same, but many of those companies are different, and it's because of situations like this that they let fester over time. Yeah. It's compounding over time, negative or positive. The long-term effects of compounding are remarkable, and that can be good. It can also be bad if you don't do things the right way.
Walk me through. I'm just really interested in like the operations. So let's just stick to the trading side. I think the ComponentMRO, even though I know nothing about it, makes a little bit more sense to my limited brain here. But on the trading side, so when you're looking, let's say that there's an aircraft that's coming for part. Are you bidding on the airframe itself?
Mm-hmm. Yeah, absolutely. So last year we bought 30 airframes and like 50 engines, not including the 6 aircraft on lease. So we'll literally, we've developed some pretty cool, AI text recognition tools, and we have massive data. So I can tell you, if you give me any part on any Boeing or Airbus aircraft, and really ATR or Embraer as well. You give me any part, I'll know what that part is worth. We'll have a retail price set on that part from either having it in stock today or our previous sales price. We have repair history on what those parts cost to repair. And we can literally take an OCCM or a hard time component list, drop it into a little magic box that we have on our desktop, and it will spit back the retail price on that part. It'll spit back the average of the last 10 repairs that we have, and then it'll give you the net value on that component. And then it'll also tell you how many do you have in stock. Because if you sold a part for 50 grand, and it costs 5,000 to repair, but you have 20 of them in stock, it's not really worth $45,000. It's worth something, but if you're putting $45,000 of value and expecting to get that, and you're underwriting your aircraft to that, you're probably going to have a lot of inventory, and you're going to have a problem down the line. So, we're looking at every time we look at an aircraft or an engine, we're looking at every single line item and what it's worth and how many we have in stock and what the repairs cost and how many we're selling per year and, what the velocity is on moving that part. So we definitely do that on every single airframe we look at. We also have 30 people, 50 people that are going out every single day and they're looking to buy single line items. So if they see a part that's worth $30,000 and we think somebody mispriced it at $15,000, we're going to go out and buy that part. We're brokering parts, as well. So, if an airline sends out an RFQ and we don't have it, we definitely will try to broker that part depending on the relationship in the airline and if it makes sense or doesn't make sense. But that's a significant portion of the business as well. But when you're out brokering parts or trying to buy something off the market, you really learn what that part is worth, because what's something worth? It's worth what somebody's willing to pay for it. And so, we really understand the real value of these components because we're brokering parts, because we're buying single items, we're buying packages, and then we're tearing down full aircraft and engines. So, you have the data that's actually accurate, and we have millions of proprietary data points in our system that have lived in our system for the last 9 years that, allow us to make these decisions accurately where we're not often wrong.
Okay, so you've priced the parts of the aircraft that still exists. Congratulations, you win the bid. This airplane is now yours. You transact on it. You partner with a teardown shop, or are you doing that teardown yourself?
We're not doing the teardowns ourselves, so those are going to third parties. We've probably torn down aircraft in like 20 locations throughout the year. So you go and buy an aircraft and you think it has $2 million of parts on it, you pay $1 million. Great. Okay. Well, good luck getting those parts off the aircraft.
Right. Yeah.
You need to go. Well, let's talk about reviewing all the records for the relevant components. Let's get all that settled up. Let's get the landing gear. There's, 39, components that are life limited on a landing gear, and they all need to be correct. You need to have your life limited parts on your APU. Depending on the airframe, your nacelles are life limited, THSAs. So you have to clear all those items first to make sure that you're finding the value and you have the right paperwork for the parts that you need. Now, you don't want to get too much paperwork, because if you're asking for, birth certificates on like a display, you're wasting everybody's time because nobody's going to actually require that. So you need to know what to ask for, and you need to know what to just say, hey, we don't actually need this, and you can throw it out. So get your paperwork cleared. Go through the legal process, make sure that you're not exposed to some foreign taxes or some state taxes or whatever accountants and lawyers like to bill you for. So clear those issues up, get a teardown slot. So it's not like you can just have a million slots like waiting for people to tear down at an economical price. Tear down the aircraft, go through the harvest list off the aircraft, make sure they haven't missed anything. So go back to your OCCM, your hard time, make sure they got all the valuable components off. And then there's plenty of components that are very valuable that are not on an OCCM or hard time. So you have to like really dig in and really know what you're looking for. There are certain, panels on the pylons that for whatever reason, they break and they're $18,000 new, and nobody has them because people just throw them out. But if you know about them, you're going to pull them off your aircraft, or you're going to certify them for $1,500, and they're worth 15 grand, and there's 2 per side, and multiply that times 30 airframes over the year, and it's a significant amount of margin at your business. So you really need to make sure you're pulling every last piece of value, but you also need to make sure you're throwing out the stuff that isn't worth anything. Otherwise, you're going to be like, your warehouse is going to be a landfill, and you're going to need 10 million square feet of space that's going to cost you an astronomical amount of money that also doesn't make sense. So you really need to know what you're pulling, what you're shipping, what you're paying to ship. And the amount of times that I've shipped massive landing gears, massive engine cowls, just stuff that is worthless. Like I've lost millions of dollars doing this over the years before we learned and got better at it. So there were some expensive lessons that we definitely paid over the years. So then the parts get to the warehouse after they've been off the plane. You know what you want. They're received into stock. So you'll take 6 pictures. Your people in your warehouse will take pictures. They'll put them into a crate. They'll barcode them. They'll have all the paperwork uploaded, the removal tags. They'll have the trace paperwork in the files. And then once they're in stock as removed, nobody really wants to buy an as removed part. If you sell an as removed part, you're leaving a lot of value on the table. So then you have to send it to a repair shop. So you have to be an approved customer to the repair shop. You have to have credit terms set up with the repair shop. You have to pick the right repair shop, because if you send the same part with the same work scope from shop A to shop B, the difference in price could be, one shop could charge you $5,000, one could charge you $20,000. It's the same scope of work. And so you have to have that intrinsic knowledge of who's going to actually provide you with quality work at a reasonable price where you can still make margins on the part. When the part's at the shop, you're going to get a scope of work. It's going to have all these piece parts on it. You need to go and make sure that you're getting those piece parts at a fair price and the lead times are reasonable. So we have a whole procurement team that's going out and fact checking every single repair order that we look at, repair quote that we look at, and they're outsourcing piece parts. Sometimes they use serviceable material. Sometimes they use new surplus. Sometimes we have relationships with OEMs and we're getting parts at a 40% discount and the shop's marking it up at 70%. So we have to provide that ourselves. You have to negotiate with the shop to make sure that they let you do that. Then you finally get the part back, they ship it back to you, you receive it back in, you take 6 more pictures, you upload the 8130, you upload the workshop report, you barcode it, you put it on the shelf, and then you have to try to sell it to somebody.
And then that's the point. That's what you call inventory at that point right there. Yeah.
It's all inventory, but sellable inventory that we're willing to part with. That's what we're selling. And we're trying to sell it at a fair retail price to all the airlines around the world. So to sell a part, you might have to quote it 20 times. So there's a lot that goes into that. You have to have 24/7 service to these airlines to make sure that if they're coming out for an AOG part and you have it ready to go, you better be on it, because if you're not, one of your competitors will be and they'll get the deal. So then you take a purchase order, process it through the system, make sure it's shipping to the right address, because you're an airline. It's not like they only ship to one place. You got to make sure everything's perfect in the system. You have to make sure that your export compliance is done perfectly, especially today, which is a major cost and a major friction point for part sales.
Is that because of because of Russia? Yeah. Interesting.
Massive issue. Like, I have 2 medals up there from Homeland Security that I could show you, because we've helped them with some investigations over the years. Nice. Then you'll issue a pick ticket to the warehouse. They'll box it up and they'll ship it out to your customer, and hopefully it doesn't get damaged in shipping.
You taking notes, Garrick?
Yeah. So what I'm really understanding. Oh, sorry.
Yeah.
Finish. Yeah. Let me.
And then you have to get the airlines to pay you.
Oh. Boom. Just that part right there stresses me out, right?
So it sounds like you just need a cell phone and a laptop and you could do this, right? I mean, that's what it sounds like to me.
You can do it at a very small scale with a cell phone. You can sell 10 parts a month or 5 a month.
Yeah.
And one other thing that I forgot to mention. The parts and the airplanes and the repairs are expensive, and the airlines don't pay you on time. So you need a little bit of money to do this. A little bit. Just a couple dollars. Yeah. So I'm curious to, obviously it's definitely a not for the faint of heart, and it's not for everybody, because you, like you say, you really need to understand what you're doing. And I think that's why there's so many probably of the lessors that would just call you and be like, hey, look, we've got an airplanes coming off lease. You guys want to buy the airframe, or you want, we'll take the discounted price and we'll let you take the risk. And I think that's where, boy, not everybody gets into it.
One
You can
question I
also
had.
lose money. You can totally make bad buys and lose money. And we've
Of course,
definitely, of course, we've done that. And we've probably, over the years, if you took every time that we lost money on a deal or a part or a repair order, we've probably lost tens of millions of dollars. So it's like, it doesn't always work. It usually works, but not always.
Yeah. Now, so my understanding is, not every aircraft of the same type is built the same, right? And that's something that, I've kind of tried to tell people over the years in terms of, an A320 isn't an A320, and it's not. So depending on when it was built, right, you could have different part numbers, different parts, different things. And so how do you guys kind of keep track of that to be able to know, hey, look, if we're buying, even if it's a 5B, 1998 built airplane, it could be very different from a 2010 built airplane. And so the parts that are on the 98 airplane may not be something that goes on a 2010 airplane.
Let me make it a little more complicated for you. A 98 airplane with 5B engines is not the same as a 98 aircraft with 5B engines. They're different. So, as an example, there was a bunch of these like old MSNs that were coming out, in 2020 that I can think of. That were like MSN 5 or 600. And they had recently gone through this like crazy avionics upgrade where the avionics were worth like $2 million on these aircraft, which is a super high number, and all the latest Thales displays and FMGCs and everything else. And, normally the avionics on a 98 Airbus, they literally might be worth, it could be $250,000. It's like very little. These specific aircraft, they were worth, I don't know, $1 million, whatever it was. It was like 5 times the amount that a normal one would be with that vintage. So even looking at the vintage is not going to get you very far and might lead you somewhat in the right direction. I'll say this, it'll definitely lead you somewhat in the right direction, but it's definitely not going to give you an accurate depiction of what value is actually on that asset. Something else that's interesting that I don't think people really have a lot of understanding of is that later model A320s and even earlier model A320s that have had upgrades done to them, they have a tremendous airframes. They have a tremendous amount of commonality with NEOs. So if you're looking at like, MSN 4000 or 5000, or you're even looking at MSN 2800, but it's an upgraded aircraft that's been maintained in specific programs that have, high specs, the commonality with a NEO is shockingly high. It's like probably above 50% if I were to take a guess of the value. So even in 20 years, if you're parting out, CEOs, there still is going to be a ton of commonality with the NEOs in the future. So there's more value than you would expect. And the same goes for the 737 MAX to the NG. There's a ton of commonality. Obviously, the nacelles are different. The gears are different. APU is the same. Many of the avionics are the same. Some of the flight surfaces are the same. The wheels and brakes, a lot of the stuff is actually the same on these aircraft.
I love it. So, okay, getting back to your example of the avionics, the same vintage airplanes. Why did those avionics exist in those aircraft? Was it just a spec? Was it an option that the airline chose? Was it a geography?
I don't have a good answer for that. Some of it can do with like, TCAS compliance in various places. There was some 5G upgrades that needed to happen. I think there were some like ACMI operators that wanted to operate really old aircraft, and to do that safely, they had to do like a major avionics upgrade depending on the geographic location that they were flying. There's things like that they kind of have to do. So it's stuff like that, but I don't have an exact answer on why there's vastly different specs. I looked at one recently that was like an MSN 500, and if you told me I could buy that plane for like $400,000, like I'm not sure that I would want to buy that asset.
Because then you have teardown costs, shipping, all the inventory cost, all the stuff that you
it's just like kind of junk like this. So it's really, as an appraiser, trying to give a reasonable value on an airframe, there's no real way to do it without really knowing part number by part number, APU, landing gear, nacelles, avionics, wheels and brakes, slides, and everything else. You won't get there.
But let's conceptualize that, because I like the idea of Garrick being wrong. Just stupid.
Which happens every day.
A new airplane. So let's consider, since I think in graphs, let's consider like the difference in value to what I'll call like just part out is not really what I mean, but the value of the parts, like the sum of the parts versus the whole. At day one of that airplane's life, those two are, it's almost entirely just, what's the appraiser term? Next best use, right? It's
best in use. Yeah.
It's the asset as a whole. As it gets older, the shift of value, I guess, would start to lean more towards a bottom-up parts pricing as it just gets closer to the end of life, or the likelihood that it could be at the end of life, to the point where, say, a 24, 30-year-old airplane, and Garrick, I don't know if I don't think you appraise like some of the parts, do you? At those?
No, I mean it depends on the ask, right? I mean, if it also depends on because sometimes that's when the numbers get a little wonky, right? Where you're looking at kind of your halftime, market value, and it's, when you start looking at doing a bottoms up approach where you're like, okay, well, no, if you were to add kind of a average number on the airframe and the engines and everything else, now all of a sudden you're way higher than where you would be on a halftime. And there is a difference, and that's the tricky part for the appraisers, is that there are differences in terms of like, look, what an airline may be willing to pay for an airworthy asset will have a value, right? Versus the value of the parts. And those could be two very different numbers, right? But then when you go to, when somebody's trying to, figure out, oh, what's the value of this? And you tell them, well, if I'm valuing it as a flyer and it's airworthy and everything else, and it's $10 million, they could be like, well, yeah, but when, I could sell the engines for 15. So then it's like, okay, well, yeah. And that, so at what point does that then create kind of that floor, which is what we've seen over the last couple of years, where now all of a sudden, NGs, which were, sub $8 million at some point, are now more like 12 to 15, if not more than that, based on, vintage and everything else, right? But that, all of a sudden, that pricing kind of gets set where you're like, well, yeah, it's not going to be any lower than this. And so then you have to look at that and kind of raise those numbers, right? So it's similar to your business, David. There's never an easy answer. It's always like, well, yeah, what are the parameters and everything else?
But you're not even talking to the same buyers, right? I know the airlines are buyers and this and that, but
a smart seller has to talk to different types of buyers. They should talk to multiple part out people, multiple cargo people, and multiple airlines, because people will have vastly different uses. And it's interesting, like we've seen deals where we've bid, part out price that we think is competitive, and we know we're competitive because we win a lot of assets. And somebody will come in and will offer twice as much as we will. And we're like, okay, well, that can't be going in a part out. So we do lose deals to people that have a totally different view on what they want to do with the aircraft. If you're operating a small cargo operation and your highest and best use with that asset is to fly cargo with it, obviously that's what you're going to do. And it's not apples to apples. So a smart seller talks to all three of those types of people and really understands, the highest and best use. Because if you're only looking at parts people, you're only going to get parts numbers, and those numbers will vary. Some will be higher than others, but you definitely want to talk to all three.
I'm even referencing like inside the same airline, the guy or gal who buys, they're on the fleet team.
Yeah.
Is different than the guy in maintenance or gal in maintenance who are buying for parts. Right.
Sure. Especially at the big airlines, the right hand is not always talking to the left.
Right. So the actual value of a whole airplane is defined by the market price of what these fleet managers are paying, and the market value of the parts, the sum of the parts, is set by the maintenance managers or whatever, right? It's that different department. Yes, they obviously work closely together, but not from necessarily a pricing standpoint, because they're not pricing the same thing. So there are two distinctly different markets. What I think is interesting is, Garrick, what you mentioned, when engines are obviously the easiest example, if you consider the engine a part, which it's not, but it's a component, we'll call it. where it becomes obvious that the components are worth more than the market value of the whole airplane. But where David's working is like at the part number, right? The disconnect there, it seems like, especially at these end of life assets, you should want Garrick to appraise as low as possible because that lowers your buying price, and then you can.
Well, until you want to sell something, and then you want me to.
But the parts,
yeah, well,
right. So
the market sets the price. The appraisers are they're going to allow a bank to give you debt.
Yeah.
Yeah, and it's look, there's different purposes for different things, right? I mean, and it's I think there's definitely a difference between what somebody knows they should pay or sell something for versus what the overall market tells you something is worth, right? There's always going to be differences, and I think that's where the benefits are in aviation. It's where the opportunities are, because ultimately there isn't this one database where you're like, all right, I want to know what this airplane is worth, and you get to see everything that's been sold and what price has been paid. And on the parts side, it's a little bit different because you do have some of that, but you also have to know the nuances of why people are doing this, right?
What are your scrap rates going to be? So even when you don't always know. There's always nuance. So, all right, I have a question for you guys.
We ask the questions here.
I'm going to ask a question now. All right, so we've seen these Boeing and Airbus forecasts that they put out every year. Talking about the number of aircraft that are going to be needed. In the past couple of years, there's been a total narrative shift on global population. It appears that India and China have both hit peak population, and China is definitely declining. India is totally plateauing. And the only place where you're seeing real population growth appears to be certain areas in sub-Saharan Africa, Afghanistan, places like that don't have large aviation sectors and most likely won't for the foreseeable future. So do you guys have an opinion on if we kind of see a population plateau? Do you see that? What type of effect do you have that? What type of effect do you see that having on the commercial aviation business in general?
India still has some room to grow. China probably more than makes up for that, in that I think they've been overstating for a while, right? So it definitely evens out. One thing I would point out, so I'm generally totally along that you're bringing this up, I think is key, especially in the context of the OEM forecasts, which are made differently. I don't want to call these guys out because they do a great job, and like I've seen behind the scenes, they're great models, but these are marketing documents. Don't forget, right? So we'll set that aside. But so I think the next century will be defined by the end of population increase. I think our ancestors will look back on this time as like, oh man, like we had this period of amazing growth as a species, whatever. This is the century where that plateaus, and we deal with that plateauing. So I wholly agree with you on that. That said, though, Japan has been going through this for 30 years, and they haven't collapsed, right? There's growth. There's just kind of what we call mature market growth. So it doesn't fall off a cliff. However, now let me take this to a really dark place. I think this greatly impacts commercial aviation, quite frankly. I don't know when. I won't guess when. But in the grand context of macro, long-term, 30 plus 40-year forecasts, where this affects commercial aviation and the demand for commercial aviation is just in economic stability and geopolitical stability. Those are the things those are the threads that start to break. And we're already seeing it, right? Ukraine, the Middle East, pick your variation of any of those and the other issues that they've solved. That's what I'm most concerned about from a macro standpoint and the effects. So commercial aviation would be a second order of magnitude to that. But listen, they're talking 40% of the future deliveries are going to go to China. These are 20-year, I think they're 20-year forecasts, 40% to China. China's at like less than 10%. And we've already got half of that forecast. The backlogs are beyond half that forecast. Something's going on in China, right? Beyond the population. Either they're going to wake up and buy a bunch of airplanes. The answer to your question is My official answer to your question is that's the question to ask. I don't have the answer.
Well, I mean, look, I think, the reason why I hang out with Courtney is I think he's pretty good at the stuff that he looks at. But when it comes to like the impacts of commercial aviation, I think ultimately things change, right? And so as we start to see, population kind of plateauing or decreasing, right, then the instincts will be to kind of look at it and go, okay, that means less people are going to fly, right? Potentially, it could be. But that's not really the case. I mean, I think what happens is that I think the people that fly changes, right? Because now all of a sudden you're looking at, well, I mean, because I think the percentage of the population that travels today is still pretty low. So you still have,
is it like 12% or something like that?
It's extremely low. Yeah, it's something ridiculous, and it depends on the country, right?
I think it's very low.
So there's still a high percentage of the population that has the ability to travel, and also I think of those that travel, and I think the airlines are, depending on where you are, I think they're trying to capture that. I think the traveler is changing as well, right? In terms of like, so does it mean that we'll have a ton of low-cost carriers out there that because everybody just wants to fly on the cheap? Maybe not. Maybe it just means that those that are that have adapted and that are trying to all of a sudden have 4 different classes of service in the airplane. That's what it takes, right? Because then you're going to have people that do want to pay more to get a little bit more because they're now all of a sudden making a little more money. So I think it's from that standpoint, it doesn't necessarily mean that it impacts commercial aviation negatively. I think it just forces it to adapt, and we've kind of seen that sort of take place with the U.S. airlines, and Courtney's put out some stuff on that in terms of like, U.S. airlines are really, they're as an airline they lose money, but as when you look at everything else, they make tons of money, right? And so I think that's how things adapt, right? You kind of figure out, okay, well, how do we keep people coming on the airplanes, but then make money doing other things, right? So I think that's to me when you kind of see those in terms of like, well, population is going to start going down, which I think it looks like it's inevitable just based on the fact that I think the birth rate around the world is down, and people don't necessarily they choose not to have kids these days. So I think that will continue, but I think the industry adapts.
How do you look at positioning Setna for the next 20 years, considering these?
So I'm going to take a contrarian approach on this. So if you're a diaper maker, it's probably not great for your business. It's probably problematic. If you're an oil producer and seller, particularly with electric vehicles and alternative fuel and nuclear that's definitely coming online right now, I don't think it bodes great for oil production. Specifically for commercial aviation, I think it's an unbelievable tailwind, because if you live in India and you have a middle class to an upper middle class salary and you have 6 kids, you don't have any leftover money. If you're in India and you're upper middle class and you have 1 kid or 2 kids, all of a sudden you're joining the global class and you're traveling around the world. So I actually think you're going to see even more demand. Look who travels the most in America today. Is it people that live in the country that have 6 kids? No, definitely not. It's urban people that don't have kids or have 1 or 2 kids. So I think it's actually going to be a massive boon, and I think it's going to be extremely positive for maybe not for the 200 years down the line, but probably not that relevant. But for the next 30 years, I think this is actually going to put a lot more disposable income in the pockets of a lot more people in a lot more countries. And, places like India and places like South America, they might start to look a bit more like certain places in Europe or, North America. I'm not saying that India is going to become the United States. That's probably not going to happen. But I think you're going to see a significant increase in the number of people that are going to be traveling because they're going to have more disposable income.
So you think you're wrong, Courtney?
No, I don't think anyone's wrong. It's not that. I just think this brings more travelers. Like, it's bad for the diaper makers, obviously. It's bad for baby formula makers in China, but It's great for, this type of, it's probably good for restaurants. It's probably good for hotels. It's probably good for, the trends that we've been seeing in the West for the last 30 years, where we've seen our population, peak. We've seen massive increases in travel, and that's what people like to do with their money. So I'm really confident that this is actually great for our business long term, particularly internationally.
I would say 15 years rather than 30, although it happens geographically at different points, right? So India is still going to be growth for the next. There's a plateau in their population, but I think.
But it's small. I think isn't the birth rate in India only like 2.5 or something? It's not super high anymore. It was way lower than I thought it was.
It's certainly not what. Look, India is still on that trajectory, but we are within sight of a plateau in India. China's past it. Japan, Korea, way past it. The U.S. and Canada are way past it too. The only reason we're not is because of immigration. Europe, by the way, is way past it. And really, what you're describing is the spending, the discretionary spending is more available for that aging group. If they don't have kids, it's more available. But it is self-eating, right? At some point, now you don't have productivity. The economy's dropped just for lack of people. The question really is, when does that really start to happen and eat in? It'd be just a guess anyway. But the point you're making, I think, is valid in that there's a tailwind in that that's where actually all the money is and the discretionary income is in that aging population, which, by the way, was born 50 years ago, plus or minus, right? When growth rates were good. So entering that period of will I travel and how much will I spend to travel is an increasing population for the next, I'll say 15 to 30 years. The question is more, how do these other elements of the economies react to a lack of inflow? I mean, we know that Japan and Korea have done just fine so far. So we know it's possible, right? We know that things don't just collapse, at least, when you're talking in those regional economies. But I think this is the question of probably our kids' generation when they finally get an answer, right? Where they're like, whoa.
What type of impact do you see this population plateau? What type of impact do you see it having on interest rates?
Yeah, I think, that's a really good question, because you got to get into the game theory of it, right? It's not just how do interest rates react during different environments. Like, we tend to think of interest rates as like a force of nature, but they're people deciding what these numbers should be, right? We actually went negative.
Well, you would think that at some point it probably lowers them, right? Because if all of a sudden you've got a smaller portion of the population that's young that would typically go out and buy houses, and housing continues to be more expensive than it used to be, which I think is kind of where we are today, does that just change the mindset where people are like, well, do I really want to buy something now, or do I just want to keep renting, or does that change the mindset, which then kind of pushes banks to kind of go, all right, well, we're not getting the requests for mortgages as we used to, or we're not getting the requests for home equity loans, or so we have to do something to kind of re-energize that, and the way to do that is to lower interest rates, right? So
yeah, I'm not sure, because the population issue, it affects both the supply and the demand side, so it's totally unclear. Mm-hmm. I just wanted to know if you had any interesting insights, because I figured you both might.
That's an interesting question, because on the supply side, labor shortages that's a relative term, but labor, the era of basically unlimited labor probably will die with globalization. That's another relative term, I guess, in this context. So and we're starting to see this now, where we're relying more on local labor pools, that will drive up labor costs, good for those people. That will have an inflationary aspect, but then just overall productivity, right? And just the lack of new people will have a deflationary aspect. It's
a very tough question to answer. I look at my repair shop in Arizona, and basically we can have one operator running 3 CNC machines at the same time. And the operations on those CNC machines previously would have required, like, depending on what you're doing on them, somewhere between like 5 and 10 machines, which would each need their own operator, all operating at the same time. So these machines have basically taken somewhere between like 4 to 10 jobs each on a daily basis, and you're still getting your same productivity out of it. And I expect things like that to continue. So, more people or less people with technology can obviously do a tremendous amount more. So you also have to totally factor in, the exponential growth of technology, which we're very much seeing firsthand today.
Yeah, you're absolutely right. Yeah, and then, back to engine parts and, new aircraft and all of that, the pace of new technology, even though it feels like it's at a rapid pace, it's slowing, and it will continue to slow, which is good for parts, right? It's good for the stuff that's already built. And by the way, I don't mean because people are lazy or there are not enough engineers or whatever to come up with the new technologies. I'm saying that use fuel burn as an example. It's asymptotic, right? You can't go below 0. And when you figure that out, let me know, because I got a business idea for you. But 15%, if we always have to have 15%, it's a lot harder to hit that 15%. And the 15% represents a smaller number, absolute number, each time we do it. So we're seeing that slow down. Before we even talk about the technological advancements are coming now at the cost of reliability, right? Which, again, just puts more value into the existing. That's why I'm fascinated by the stuff you guys are doing, the growth. I love it. I think it's great.
Yeah, look, when you think about the current OEMs and with all the heartaches that they've gone through and all this money that they've had to pay for not doing what they were supposed to be doing, or not doing what they said they would do, it's a good 15 years out before you really have a new product. That's, right? That's a long leeway, but which I totally get, because you'd want to make sure that you hopefully make some of the money back that you just spent on your current technology. So, which is good for...
There's zero incentive to innovate. So, like, why these companies have no, the Charlie Munger quote that I love and I always use is, show me the incentive, I'll show you the outcome. And these OEMs they're oligopolies, and they have no incentive to innovate because it costs them a lot of money and they don't get any benefit from it. They can have a lot more financial benefit from selling the products that they have today, making them and making their margins. So unless you have some third party come in and massively disrupt the market, which, given the challenges that the government's put on everybody, the capital requirements that are necessary to undertake something at this massive scale, I don't think you're going to see a new airframe and engine maker come out of nowhere. And if you do, it's 15 years away also. And it doesn't start to really make a dent in the market for 20 years. So, you ask 20 years, what do I see Setna looking like? I see it remaining with essentially the same ownership structure, which is myself, and my partners, very limited ownership group, same board, me and one other person, much larger company. We're going to start getting into acquisitions right now. So we have 2 repair shops under LOI to purchase right now. Hopefully it goes through for us. We think we can add a lot of value to them and vice versa. So I expect us to have, a large supply chain of component MROs in-house. I expect to be running more programs. I expect to be, a significant aircraft lessor. We're definitely not going to be AirCap, of course, but we'll be mighty in our own right. And I'd love to get into the manufacturing space as well. I think there's some opportunity there where you get into a manufacturing business, you add value by, improving their MRO and component, MRO abilities. So there could be some good value add that we could do as operators. So I'd love to acquire some sort of, manufacturing company.
Hey, listen, Boeing's could probably use, just a suggestion.
I don't think I have the balance sheet for that one, unfortunately. But, I think Setna, God willing, it's going to look pretty similar to what it looks like today. We have a lot of fun with what we do. We provide living wages for every single person that works here, from, the newest person that we're hiring out of, programs for autistic kids, to the highest earning executives at the company. We're changing everybody's lives for the better. We treat people well. We provide meaningful work. We're doing something that actually matters. We're, an essential part of the supply chain that, moves people and goods around the world. I feel great about what we do every day. I love my team. I love the opportunities that we provide for everybody. And, I love taking bets and buying aircraft. So I don't really see myself doing anything different. We're not for sale.
I mean, look, so we're the tail end of, I think, our discussion here, but it's been fantastic to hear about everything that you guys are doing. I think it's great, right? I love the energy. I mean, that's what we love. Why we do these things, right? It's just the passion that does come out in terms of, like, you love what you do and it comes across, right? And we love what we do, and that's why we do this stuff. So it's definitely, really appreciate kind of you taking the time to walk us through this. As I've told you before, like, the Setna name is just kind of something that has been, coming up more and more. I think you guys are doing the right things, and I think people are noticing that, and that's great, right? It's not for the wrong reasons, so that's a good thing. So keep it up, and we'll certainly love to keep in touch to kind of figure out, where you are a year from now, 2 years from now, 5 years from now.
Definitely,
I think it's in the right direction.
We'll have you on in season 20 and C or 23.
I would love to, and thank you guys, for what you do. You guys are a tremendous resource for people who are interested in our space. So you guys are doing something really remarkable, and I really appreciate it. It's great work.
Yeah, well, we love doing it, and I was able to convince Courtney to get into it, so that's a good thing.
Cool. All right, thanks, guys.
That's great. Like, we should be doing that. Hey, you know what this guest is this week? Younger and more successful.
Yeah.